Hey Angel, how you doing?
Good, good. How are yourself?
Really good. First of all, thank you so much for taking time of your day so that we're able to connect with us and share this amazing program. So a lot of people, a lot of audience, we help a lot of the Hispanic community, got kind of scared. So that's the reason I want to bring you in today. And the reason they got scared, so if you're not resident or you're not a citizen, a few weeks ago they announced that FHA is no longer is gonna be able to finance your loan. Is that correct?
That is correct. Yeah. Based on new government changes, a lot of the easy routes, that were available for non-resident aliens or maybe permanent residents, even people with DACA, just a work permit, those were basically redacted and a lot of those programs went away. So, yeah, thank you very much for allowing me to be in this room with you, and I look forward to just giving out information to your viewers.
Yes, perfect. Okay, so technically, going straight to the main point. So anyone, the deadline is it's going to be in 3 days, if I'm not mistaken. It's going to be May 25th. So that's the last day you can open escrow as an FHA if you don't have a resident card or you're a U.S. citizen. Like you mentioned right now, if you have a DACA, if you have any type of work permit, etc., you won't be able to apply for an FHA loan anymore. There's other type of programs that you can apply, but the main reason a lot of people will use FHA loans, one, because you can go in with 3.5% down payment, and usually the rate is a little bit lower than conventional loans. Okay, so now the program that you offer will be able to help this type of families and even more type of families and offer even better terms than FHA. Can you explain to us a little bit more what are the details of the programs that you have right now?
Yeah, so our program it's a conventional loan, so it's similar to what Fannie, Freddie will offer, right? Most lenders you go to, those are the investors they use, and their guidelines are a little bit different, right? Because they are based on what the investor decides. With our program, it's actually a portfolio program. So our bank actually sets the rules, and the rules are a little bit different from those Fannie and Freddie Mac loans. One of them is basically, as a non-resident alien, there is alternative documentation that we can provide, right? We don't need to have specifically the visas with the F1s designations with H1 or different types of documentation that otherwise you would need elsewhere. With us, you can actually move forward with just your passport, matricula, ITIN. If you have
Wait, wait,
also
wait,
a
wait, wait,
work,
wait, wait, wait. Did you just say right now I-10?
correct, correct. Yeah.
Okay.
So
But and let me guess, you asked them 20% down payment and they probably getting a 9% rate.
no, so that is usually the case, with other lenders. What I hear mostly in the market is it's very expensive to buy with I-10, right? Our program is actually, there's no distinction between I-10 or buying with a social as far as the rates. However, we do, depending on the county, designate different down payments, but your rate stays the same. So the rate itself, it could be anywhere from, 6%, or depending on also the program that we use, because we have multiple programs, it could, right now we have a 6.75 on our bridge to home loan. So the rate does differ, but it's not nearing that 9% mark, which most lenders have at the moment.
Oh, okay. And the reason I made that comment because I know a lot of banks, because you mentioned the word I-10. So I-10 is someone who doesn't have a social, doesn't
Right.
have a work permit, most likely, and technically they don't have any legal status in this country, what it means to be able to work and be able to be in the country. So I-10 is a specific number that you request uh, to United States in order for you to do taxes. Okay, so your bank is able to do it, but you guys see it everyone on the same way. You guys don't
Correct.
see them differently. Like I know in most banks, they either require 15% down payment to 20% down payment, and usually they get hit by 2 to 3% rate higher than everyone else in most cases.
That's
Okay.
correct. Yeah.
Yeah. And but with your bank, technically, they're still gonna be able to buy a home with lower rate in most cases. I believe right now the few last loans that we closed, it was close to the 6% rate, and the down payment was on 5% down payment. And of course, depending on the county that we're gonna be touching a little bit more in a few minutes, which county you're gonna be able to buy with a lower down payment. Um, so yeah, so that's a huge benefit, for a lot of people who think they're not able to buy a house because if you think about it, in California, house prices are super. I don't want to say super high, but they're higher than other states. Like for example, I know if you go to like Arizona, you can buy a home for 300,000, or Texas. In California, at least LA County, most houses they're like around 600,000, 700,000. If you say 20% down payment, that's it, more than 100,000 of down payment. And a lot of people they don't have that kind of money saving in a bank account.
That's true. That's true. And actually, you know what? I'm glad you brought that up because my experience, I've been doing this for a long time. And sometimes, even if you get a customer, right, a buyer that wants to buy a property, and that property is 700, 800,000, customer makes very good money. Let's say they make, 150,000, 200,000, right? However, we know inflation is a big factor. So you look at a customer who makes decent money, they want to buy a not that expensive house, but now you bring in the rate into it, you bring the PMI, and just because that customer, that buyer wants to or is able to qualify for a 800, $900,000 house, they don't necessarily want to pay the mortgage because the mortgage itself is anywhere from 5,000, 6,000, $7,000. So our program is built to alleviate some of that, you know, stress from them, right? Because it's not really just about qualifying. Sometimes it's also about buying the property, being comfortable with the payment, and moving forward with how your life is and keeping more or less the same active lifestyle that you have as far as expenditures, right? So it's a very good point. Thank you for bringing that up.
Yeah. And now you mentioned that we recently closed one family here in the city of Whittier, by the way, where we met them. They wanted to buy a house. They had their own lender at that moment, and they say, you know what, I want to buy Whittier. I don't want to move too far. And when they saw the payment, they're like, you know what, forget about it.
Yeah.
I don't want to buy the house anymore. And like you mentioned, they were getting at least a 7 to 7.5 rate. They were paying mortgage insurance on that home. And we told them, hey, we have a great bank that we work with. We have a great lender that can help you with. And let me give you a second opinion. That's all we did. And yes, the payment, I remember it was a huge, it was almost $800 less, because they able to get a lower rate. It was no mortgage insurance on the loan, and also lower down payment, only 3% down payment.
Right.
And yeah, they now we gave them keys. My team probably like less than a week ago, and they're super happy. They were able to buy a house. The purchase price was a little bit higher, and the payment was lower than what they were expecting for that specific purchase price.
Right. Yeah.
Yeah.
Incredible story. Incredible story. So many success stories I've seen, and you know what? It's just incredible. And thank you so much for helping that customer. I mean, it speaks volume because at the end of the day, if you're looking for a program for your customer to help them out, stay within the area that maybe they don't want to get away from, right? Because it could be as easy as just saying, go buy in Apple Valley, go buy in, you know, Lancaster, Palmdale. But if you're helping your customer, buy closer to where their target is, that's huge.
Yes, and these programs for me, because the last 2 to 3 years, the biggest concern for a lot of consumers is not exactly the price anymore. The biggest concern nowadays when you speak to people is like high rates. I don't want to buy it. I prefer to pay rent because the rates are too high. And because of these programs, they're able to find a different option and find a way to still be able to buy the American dream, and thus be able to own a house.
Correct. Yeah.
Okay. Now, going back to the ITN, another way a lot of people were buying through this, there was a way that I heard a few times they can buy with a 3.5% down payment. But those programs for people with ITN, well, those programs uh, means the house is not under their name. They is under like a corporation name for the first 3 years, if I'm not mistaken. And also, if they sell the property for some reason sooner, they have to pay like a penalty is 1 or 2%. So technically, they buy the house, they pay everything. So the one, the house is not under name. So if something happened to them, um, the kids won't be able, in some cases, have access to the property because it's not under the parents' name.
Right.
Usually, when someone buy like an 18 scenario, when someone buy a house with the program that we're talking, house name.
I
Can
don't.
you
You
hear
know
me?
what? I think we lost you.
Okay, so my question to you: when they buy a home and they don't have a social security, does the property is going to be under the person name or it's going to be under like a corporation name, and they're going to get penalized in the future if they need to sell it for some reason?
No, no, not at all. So it's just like a regular loan, right? Obviously we want the buyer to have, you know, part of the deed, right? Because if he has ownership of the property, then he's more likely to keep paying the home. Why wouldn't we have him on title? And the other thing is, there's no penalty if they pay it sooner. So, as a matter of fact, we want you to pay sooner. So,
Yeah.
if they get a 30-year loan and they pay it in 10 years, kudos to them, and good for us as well. We want to make sure that the customer not only buys the property, but um, they keep the property long term, right? Longevity is the key here.
Okay, perfect. Now, a lot of the noise, the rates keep going on the way it is in general in the market, and also, the tariff situation, the stock market going up, going down. A lot of people are saying that a correction will be happening this year, like meaning we're gonna have a recession. Do you see something happening
Right.
on that specifically? What is your opinion on that?
Oh, you know what? I've heard so many opinions and so many theories, right? However, I always tell buyers, if you can afford the payment and you feel like you're not gonna be struggling to buy this house, buy it now. Don't wait because nothing guarantees that we're gonna have a recession, right? Technically, if we go into recession, what the buyer's looking for is for houses to go down, maybe rates to go down, affordability to go up, right? But that's not always the case. I mean, I can just tell you, we just went through the pandemic, and for many months, I heard, prices are going to go down, rates are going to go down, there's going to be a big recession because of the pandemic. What happened? The polar opposite. There was an increase in prices, increase in, well, not in rates, but if you think about it, just because the rates were low, that made properties go up almost, at least 35% more. So, in my opinion, if you want to buy, just buy when you can afford it, right? As a matter of fact, why wouldn't you buy now that the rates are high before the rates go down? Because we know if the rates go down, most likely there's going to be more people entering the market. There's going to be a shortage of housing because here in California, if you think about it, there's really not a lot of properties available. So those properties that are available now, instead of having to go against one or two other people who are interested, now you have maybe 7 or 9 people, right, in line trying to buy these properties. So buy when you can, buy now that the rate is high, and eventually, if the rates go down, you can actually lower the payment. You can change the rate, but you can't change the price you bought it for. So, you
And
know,
that is 100% true. And I remember back in 2020, because in 2019, rates were are closer to five, 5.5.
Yeah.
Right after the pandemic, even though a lot of people were not working, rates went down to 3%, and
Right.
people felt comfortable with the payment. And because of that, a lot of people who even were not thinking to buy a house, they say, you know what, let's buy a home at that moment.
That
And and I was reading an article saying that in the last 5 years, houses went up 53%, at least in LA County. So yeah, but something that I like about you guys specifically, because 2, 3 weeks ago the rates went down. When the 10-year bond went down, the rates went down, but now went up. But something I like about specifically about you guys is that you guys don't move with the market. Like rates can
right.
go up next week to 8%, and I guarantee you guys will still have the same rates.
Correct, correct. So one of the programs we have, it's not really tied to how the market moves. We designate the rate based on the need, right? It does fluctuate sometimes. We can't change it at any time, of course. But when you see the market go up and down like the way it's been, it doesn't really fluctuate. We do have programs that are very good actually, that do tie into the market. But this one specifically, the one that we're relating to, you're right, it doesn't really move with the market. So, I think the benefit of that is really the opportunity to go out and look and search for a property without thinking, well, I'm maxed out at 500,000 right now, and now if the rate goes up, I have to look for a house for 450. So I think that's the major benefit of this program, right? You're not having to adjust every 2 weeks or every week to a new price, especially if you're maxed out, right? If you're maxed out at 600,000 and next week you're looking at 500,000 or 530, now you're looking at a whole different property. You're not looking at that same property you were looking at 2 weeks ago. So the benefit
And
is there. Yeah.
yeah, and back in 2023 and a little bit of 2024, there were a lot of cancellation of escrows because of the same reason. Like a lot of people had a pre-approval letter say, "Hey, go shop, you qualify for 700,000." They took a month, 2 months. That's the normal to find the house, and finally, when they find the house, then at that moment, you know, they will reprice them, meaning they will check, okay, what is the rate today? And the qualification will be less. And at that time, they're like, okay, we can purchase the home at that moment. They were looking for something that probably were not able to qualify like a week, 2 weeks after they got a approval letter. So,
Correct.
when you guys, and I've been working with you guys at least for the last 5 years with you and your whole team. And you guys, and your program specifically probably changed twice or three times a year the rate. You know, whatever is happening on the market, it doesn't matter for your program. You guys stay, just to help the community, and that's nice. That's beautiful.
Yeah. And that's the key, when you say that word community, it's the reason why we're out there. I mean, a big part of why I do this is not because, money's, sales. It's really, if you're doing something you believe in, right? It's easier to really engage yourself into it fully. And that's key. For me, community, I've always been doing in my career community loans per se. I've been helping customers in the ranges of 300,000, 500,000, 700,000. So that's for me, it resonates.
Oh, okay, yeah. So now tell me a little bit more about the program. Okay, so if you buy in LA County, so Southern California, what counties can they use this program? That's the first question.
So right now, our focus is on two counties, right? Major counties, which are LA County and Orange County. We do lend in other counties in the IE. Those are um the LTVs, which is your down payment, is going to be factored in on the county. So depending on whether you're buying in IE, whether you're buying in Orange County or Los Angeles County in Southern California, even San Diego, those are going to differ on your down payment. And it's really based on need. So any time of the year it could be different, but the key is working with somebody like you, right? Somebody that knows how our program works. Your team, everybody in your team is aware of the new down payment for Orange County, the new down payment for LA County, right? So because of that, we're able to give the information out to the customers, right? To the buyers and not get stuck with, oh, you know what? Now you don't qualify because having a realtor that knows how this program works is the key. Is how we let out our information and really, if you're looking at Southern California, you're probably looking at LA, Orange County, San Diego, and IE, which is Riverside and San Bernardino.
Okay, perfect. So if they have a social security, in most cases it's 3% down payment only, no mortgage insurance, not even an upfront mortgage insurance,
Correct.
and not even monthly mortgage insurance. I know, like for example, FHA. That's one of the most common loans a lot of people use. FHA, they charge you an upfront mortgage insurance. If I'm not mistaken, it's a 0.85%
Right.
of the loan amount. So if they're buying a house of 700,000, that is going to be close to, if I'm not mistaken, 600,000, 6,000 on upfront mortgage insurance that is added to the loan. I'm not
Right.
good with math on that portion.
Almost
At
there.
least
Yeah.
not with
You're good.
decimals. Okay, plus the monthly mortgage insurance. So with you guys,
Correct.
they don't have that. So that's a saving at least of $300 a month that you're having uh, by using this specific program.
Correct.
Also, the rate, like we mentioned, rates are going up, rates are going down. With you guys, at least for the last few months, it has been 6% rate. And again,
Right.
it doesn't mean that will be the rate in the next month, 2 months, 3 months. It can change, but right now, most of the families that we help in the last few weeks is a 6% rate. Now, another thing that is something so nice, so beautiful is that you guys only require 1 year taxes, when most
Right.
banks require 2 year taxes.
Correct. Yeah. And I'm actually glad you brought that up. So the main benefit with us, besides the rate, besides the no mortgage insurance, is qualifying, right? A lot of the times when you get into an FHA loan, a regular conventional Fannie Mae, Freddie Mac loan, the requirements is 2 years, 2 months 2 months bank statements, 2 years of tax returns. There's a lot of documentation that you need to bring up. Apart from that, if you have any changes in between those years, there's even more documents that you have to bring in. The benefit with our program is we only require 1 year of work history. So, you have customers who maybe work for a union. We all know that union workers, they tend to switch employers very often. So now you have a union worker who maybe switched jobs 8 times in the last 2 years. He has to look for all these pay stubs. He has to look for all these W-2s. With us, maybe he only has to look for 4 pay stubs, maybe 3 pay stubs instead of 8, right? So that's the benefit with this. As far as self-employer employee customers as well, you get the benefit of, if you just started a company maybe a year and a half ago, you don't have to wait the other half year, right? Um, there is also alternative documentation that we can work with. If you have a bigger down payment, we can go what's called light doc. There is an option where you might not have to file your tax returns and you can move forward with a P&L. We all know business owners, sometimes they get extensions. Those extensions, maybe we don't have taxes for another 6, 7 months with us because they're putting 20% down. You can go with a P&L. There's alternative ways to basically get approved, right? Obviously, so many to talk about that I think in reality, once we sit down, we figure out the customer's profile, we figure out what they have, what they don't have, then we kind of guide them to what we can do, right? The other benefit as well is statements. We don't require 2 months bank statements. We only ask for 1 month bank statement. Instead of having to explain all these deposits showing in the last 2 months. Maybe you have to explain maybe one or two, right? So all that makes it a little bit easier. And what I mean easier is not really, saying that we still don't have to qualify, but it's just less paperwork for the buyer. So at
Well,
the end,
yes and no. Like for example, if you started a company and you want self-employed,
yeah,
1 year taxes will help you a lot because most places is 2 years. If you're
right,
having a
yeah,
part-time, a part-time job as well, like what do you mean part-time? Let's say you have two jobs. So they also in most banks they're gonna require also for the second job to have a 2 year work history. With you guys, it's only one.
correct, yeah,
So to me it's more easy for you to qualify for a house. Now the
yeah,
people who can use this program, first time home buyers. So this is not for an investment property. If you want to buy a home with 3% down payment, 6% rate, no mortgage insurance, this is not for investment property. It has to be an owner occupied. It could
correct, yeah,
be it could be a house, okay, like a house. It can be a condominium, it can be a townhome. But the beauty of it is can be a duplex because a lot of the programs out there for first-time home buyers, they only limit you to a single-family resident home. With this
right,
program, they can buy a duplex on the first property.
right, yeah. So it can be a duplex. I mean, there is requirements for the property itself and occupancy, right? You have to live in the property. If you're buying a two-unit property, you have to live in at least one of the units. You cannot own more than two properties, including the one you're buying. So if you already have a home, you can buy the next one as long as you're gonna occupy the next one. But if you have two, you can't buy a third one with this program.
Wait,
So,
wait. So technically, they don't have to sell the house. So if I have
right,
a small condominium, say, what, this will make sense for me to rent it out, but I want to use the program. Most programs, they will tell you, what, sell the property. So you don't have any properties, then you can use my program. You guys don't. They can keep one house and they can buy the second home as long as it will be the new main residence. So they can have two properties in this program. In a way,
correct, correct. Yeah, so that's one of the main benefits as well, right? If they have a small house and they want to upgrade, but they don't really want to get rid of that investment, right? They've made plenty of work to it. Maybe it's a future rental for them. Then now they can move forward and buy a single family residence. Maybe they have a two-unit now, right? And now they're saying, well, I don't want to live next to tenants anymore. I want my privacy. They could go from a two-unit to a single family. So there is definitely options for that, and that's one of the
wow.
benefits for this program.
So in this particular program, I believe you guys have lent almost $2 billion
That's
on
correct.
loans
Yeah.
on business specific, no million, $1 billion.
Right.
You know, and many people dream to own a house. Many people dream to stop renting a house. And thanks to this program, you guys have helped so many families in the past, and you guys will help so many families in the future.
Correct. Yeah. Yeah.
Yeah.
We see a lot of growth, and a lot of people just buying their first home, and I think that's one of the benefits we see with this program is people who thought it it is impossible, right? It's too hard. Maybe I don't have 2 years of work history. I don't have enough down payment. I have an ITIN, I have work permit, DACA, whatever it might be, right? Social, but my employment maybe isn't where I would need it to be. We can definitely use this program to help those people move and acquire property, because that's the key to wealth, right? The more property you acquire, the better. And I mean, you played Monopoly before, right? Who's the winner?
Yes.
The guy who has the most properties. So same thing in life. That is basically how the game of life is played. The more properties you have and the more wealth that you build, you'll be able to live a more fruitful life in the future.
And that's the goal. Perfect, Angel. Thank you so much.
Of course.
So if and to our viewers, if they wanna get more information, if they want a second opinion, with this program, feel free to reach out to us. We can help you, connect you with Angel and his team so that we guys able to get you qualified and be able not only get a more lower payment, but also probably qualify for more that can help you buy in the city that you really want.
Perfect. Awesome. Thank you, Edwin. Thank you for the invite, and I look forward to working with you, many of the viewers here. Thank you.
Perfect. Thank you so much, Angel. Take care.
You're welcome. You too. Bye bye.